Good morning, everybody. Welcome back to the Schwab Coaching Channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a rainy Denver, Colorado today. But on Wednesdays, pleased to be joined by my friend and fellow Schwab coach, Brent Moores. Hey, Brent, good to see you, man. How you doing?
Hey, good. I'm doing well, Kevin. Glad to be here with you. And we've had our rain the last couple of days, but today's nice and sunny here in the Salt Lake area. So looking forward to talking to the markets with you.
Well, thanks. And yeah, hopefully that means that I'm going to be getting some sun following the rain. I don't mind the rain. It's a good way to, boost up our plants and flowers and whatnot, as we are reminded that it is spring finally. That's great. Say hi to Barb Armstrong in the chat, everybody. She'll monitor things for us there. Brent and I will keep an eye on things as well. Of course, we do want to hear from you, so feel free to post in there for the duration of the show. If you're a frequent attendee, then I'm sure you're aware today is FOMC day. We're going to be hearing from the Fed. There's an official decision to be made today. Not that the decision will be made. I'm gathering, and the expectations are, according to the CME Fed tool, there's not going to be any shift in policy today. But the commentary after the fact will be certainly notable. So that'll be something to keep an eye on today. And of course, if you're not already doing so, Brent, Barb, and I would love to have your follow on X, everybody. Do so for us individually. Barb Armstrong, CS, Brent Moores, CS, and Kevin Horner, CS, everyone. So thank you. Without further ado, let's jump right into disclosures, and then we'll get to the good stuff for you. Remember, our discussion is only informational and educational. We do not make recommendations nor endorsements here. Please remember to consider technical analysis a complementary viewpoint to your fundamental research. We think it's a piece of the puzzle, but not to be the exclusive method of your research. So incorporate a few multiple pieces there when you're deciding to be a buyer or seller in the marketplace. Agenda-wise, we will be doing our standard review. We'll start top down. We'll work through the major indices as usual. We'll hit up the S&P 500, NASDAQ 100, Russell 2000, some industry groups as well, and work our way through some sectors, maybe even some other groups in the market, some commodity movement of late that might be worthy to bring to the table as well. Plenty to cover as always. So we're going to jump right in, everyone. Let's take a look at what's going on with the S&P 500 today, Brent. We've had a nice bounce back, sir. Been pretty solid for the last week. Many traders would tell you they love the fact that we're back above that 50-day. And for 5 days now, Brent, we have reached a point where many traders are talking about confirmation of the recent uptrend off these lows.
Yes. So we had a couple of higher highs, higher lows. I think that 5,500 level was probably kind of a resistance, now potential support level on this. You expect kind of a breather, so to speak, after the markets have run up as much as they have. They don't run up indefinitely. So, but what you want to see is not just like this whipsaw, way up, way down. If you're a bull, what you like to see is it go way up, pull back, kind of establish a level, and then bounce off that. And so, we'll see what happens on that. Of course, a lot of this is news driven, but right now, we went way up, and we're not getting as big of candles, not as much volatility, which is kind of nice right now in the market. It's a little nice to not have the, huge volatility that we had a couple weeks ago there, Kevin.
It's funny how that goes, right? When we don't have volatility, it can get a little boring. And then when we bring volatility back, we tend to think, oh man, it sure would be great if we could settle down a little bit. As traders, we like volatility to a certain extent, but let's kind of keep it reined in. It's certainly more comfortable when that volatility drops a little bit. I notice it's up a little this morning when I look at the VIX, but not a shock on a decision day, a day where we could have some pretty decent market movement. Reminder that what Mr. Powell has to say post-decision will talk about the health of the economy, things that the Fed are thinking about. Jobs, of course, is going to be a big part of that as well. So that comment will likely have an impact on us in the afternoon. Remember that the decision is at 2 p.m. Eastern, and typically the commentary follows at around 2:30 p.m. Eastern, everybody. So that'll give you a timeline to monitor. So as far as what we're doing today, up a little bit off the open. I imagine it's going to be kind of a quiet morning, quiet in the sense of range, if you will. I don't expect to have a huge move one way or the other. But then again, I'm not always right. That much is true, Brent. We opened above the pivot. That gives you something to monitor, but not a big move one either direction to this point. So, Brent, if we were going to assign changes, levels where traders would start to change their viewpoint, if you've been bullish off the lows, is there a spot where you would perhaps see traders becoming even further bullish, believing that what we'd undergone in 23, 24, and the short-term pullback we've seen, basically, is there that level where we'd say, yeah, the low may very well be in for the year? You have a level like that?
The longer we can maintain what I said, the 5,500 level, also around the 5,800 level, if we can break above the highs that we've had here over the past, I don't know, we had a high on, I'm trying to figure out when that is, probably early April. That would be another significant level there. So,
right here?
Yes, correct. And so we kind of have like a little channel forming. The more impediments to the stuff in terms of like support levels that we would have to break through. It doesn't mean that the market can't break through those, but the more they have to break through to start establishing, get back to the lows, that would be the sign there, I think. And that's from a technical standpoint, and that's really what we focus on here. And of course, this is all going to be driven by news. News of if we see trade deals come through, that's going to drive. The longer we have no trade deals come through, and maybe it's a little early right now, but if in 2 months we're not seeing anything, I'm thinking we're going to see that reflected in the technicals, and we're going to start to see lows. But I would kind of point to that channel that we have right there that you drew on the graph.
Yeah, that's perfectly appropriate. That's a 200-point range, Brent. And of course, we're just about in the middle of it, right? We've said 5,500 on the downside, 57 on the upside. We reside at 56.18 at the moment. So yeah, we're pretty much in the middle. And that could mean that we are mired in between it, or you traders could consider taking position based on moves through 57 to the upside, could be validating more bullishness. Through 5,500 to the downside may become a spot where traders get a little more defensive, lighten up their long positions, lighten up their SPX positions, notably. Of course, we're going to see something similar here as we move into the NDX. Let's bring that one up. Brent, I was looking at just basic commentary that's been impacting the market over the last couple of days. The big one was yesterday's news after Treasury Secretary Mr. Bessent said that there's actually going to be some meeting coming with Chinese counterparts. And again, it's this conversation, the topics, the headlines, they will continue to drive short-term moves. That is to say, daily chart moves will absolutely be part of those headlines, but not necessarily the longer-term viewpoints. And I think it's important to remember that, because we traders, we tend to think that what we're hearing in the moment is the most important thing, and that may not be the case.
Yeah, the market the market it needs to cling to something, I guess, and so it's looking at headlines, and because there's just so much uncertainty out there, and we've talked about volatility's gone down a little bit. It has, but I mean, I don't know what the VIX is right now. It's low 20s. That's not low by any means, and I'm not predicting that we're not going to have volatility in the market. I'm just saying it's not quite what it was. I'm hoping we don't see again what we saw a couple weeks ago, 3 weeks ago maybe, on that. But it's a headline-driven market, no doubt. And so that's not going to change right now, And so if you think about it, like, we're not even looking at hard data headline type stuff. We're looking at, there's a possible trade talk going on, or we're talking to the Chinese, or things like that is what's driving the market. So it's not, sometimes when you just don't have the hard data, we kind of grasp at anything, and that's what the market's reacting to.
Yeah, I think you're right on the money there. And the The trouble with that, of course, is that it doesn't it leaves us at risk, right? Because these headlines can lead to big short-term moves that result in losses one way or the other if you're ill prepared for it. So again, I think for a lot of us, if that day-to-day headline risk is rough for you, there's nothing wrong with being a little more defensive in your process. And when I say that, I don't mean defensive in terms of the groups or stocks you're looking at, but rather defensive in your trading, your trade levels, meaning simply perhaps you're reducing position size, you're using smaller dollars to make your trades. That'll help you to manage your capital a little more effectively and not be at scenarios that are more risky than those you have comfort for. So some things just to keep in mind there. Now, as it relates to the NDX, Brent, everything we said about the SPX pretty much holds here, doesn't it? I mean, another nice move, a gap level that was almost tested yesterday, it looks like. The low came in close to almost exactly, man, and we missed it by a few, but basically filled the gap here with the low there yesterday, and we managed to hold it. Now, that's very, very short term, but it sure looks like that the upsloping nature of the 20-day moving average. We've been above it for 2 full weeks now. Really hard to look at this as negative in the shorter term at this point.
Correct. And just to give, for some perspective, look how far we dropped. And then, in fact, maybe we can measure that. How far did we drop there, Kevin? And then how far have we retraced at this point on that?
Talking from the peak up there? Let's using a Fibonacci from the highs?
Exactly.
Cool. Let's do that.
Exactly.
All right. Well, boy, that's kind of intriguing, Brent. That 61.8% tells us that that's about a decision point, isn't it? I mean, moves commonly through there would be very well received if they were moved to the upside.
Yes. And like if we talk about resistance and you kind of consider resistance as an area, not an exact price, that's coinciding pretty close to that 200-day moving average, which is coinciding pretty closely to our late March highs. Seems like a pretty key level if we break through that. But I guess my other point is we dropped down a ways, but we've come most of the way back at this point. I mean, we still have a long ways to go to get back to the highs, but that's why when we talk about some of these short-term trading postures, what I hate to see is when the markets kind of go crazy, which they kind of did in early April, I hate it when I see people like who've liquidated their whole portfolio at that. So just a reminder, when we're talking about trading, we're not necessarily talking about liquidate, and taking a defensive posture. We're not saying liquidate a portfolio or anything like that. It is because the challenge is it sounds great. Oh, I want to avoid the drop or whatever. But by the time it rebounds, it can rebound so quickly. By the time you realize it, it's already come back, halfway or whatever.
It's a great point. It's a wonderful, wonderful reminder of the emotional aspect of this. For many of you, you were watching the fall in the NDX and FEX follow up to the tariff conversation, the president in the Rose Garden and highlighting all these percentages of expectation of tariffs and everything. And that volatility was uncomfortable, to say the least. And you know what? It's that lack of preparedness for such a volatile move that might lead you to taking action you really ultimately don't want to take. But it's also a great reminder, Brent, that traders differentiate their balances, right? If you're a trader, here's the balance with which I am trading. This is the balance that I'm defensive on, or the balance that I treat differently than the balance of long-term invested assets, which are more diversified and allocated across asset classes. That approach brings risk management through diversification, not through exiting the market. So just a brief reminder about that process, everybody, can be very, very helpful to you. So consider differentiating those balances for yourself. It might help you to make more appropriate decisions on the longer term side of things, ultimately. Okay, Brent, let's take a peek at what's going on with the Russell. I saw some comments, though, before we get to the Russell chart-wise that I just want to bring up. There's a multitude of you talking about the Fed in general, the desire to see the market get back to a scenario where the Fed's decision making really didn't have the level of impact that it does. And the truth of the matter is, Brent, there was a very, very long time historically where that was the case. But all of this changed in the great financial crisis and back in 2008, 2009, and then suddenly we need the impact of the Fed. We need to be listening to the Fed. Well, there's a lot of conversation around, does that change or become different in the future? Boy, I sure don't know. I don't know that we'll ever get ourselves back to where we were prior to the great financial crisis. But I understand that trepidation amongst all of you out there. I get it.
I hear you, Kevin. I was hoping that you did know and you were going to tell me, because I don't know either. I do know that there was a lot of kickback in terms of, especially with the great financial crisis, right? 2008 timeframe,
Yep.
where a lot of people are attributing some of the blame for that on Fed policy, that interest rates were kept too low, too long. It juiced the markets. And, this is kind of aside from the whole real estate, conversation as well, but that the Fed was partially responsible, overreach, I guess maybe is the word, by the Fed was partially responsible. So I think maybe there's more concern about that now going forward. I don't know, I don't know going forward there, but I think a lot of people have looked at, are going like, where should interest rates be? Should they cut? Whatnot, but keep in mind, it's just, there's always going to be scrutiny no matter what the Fed does. But there are a lot of other factors in there right now in terms of what the market is, what's going to happen with the market. And so, you guys can all listen to the news. You hear some of the talk in terms of that. It's not just interest rates. It's also economic policy. It's also data that comes in regarding, say, inflation, data that comes in regarding economic data. Just remember, there's been a lot of talk of tariffs and whatnot. Most of the hard numbers of effects of tariffs haven't even taken effect yet, right? I mean, the tariff, it takes what, 3 weeks or something for products to get shipped over from China, so the reality is most of the effect hasn't even taken place yet.
Yeah, that's a good reminder for us, Brent, because the truth is the data isn't coming through in any way. As we're going to see in the coming weeks, I think many traders are fearing that we're going to see things like decreased numbers of dock workers necessary. Truckers are going to be less needed because there's fewer products in the country making it across overseas. These are things that are going to be kind of leading indicators for us. And I think we're approaching the window where we're going to start hearing about that a little bit more commonly. So keep your ears to the rail on that, everybody, because you're right, Carol. No, shortages have not begun to hit us, but to expect them to hit us would certainly be something to kind of keep at the forefront of our minds. Unfortunately, because obviously that's the thing. If you think back to how it adjusted in COVID, Brent, there was a very big shift there, obviously, and it took a while for that to come out in the wash, right?
Yes.
And once it did, then it becomes a little prolonged, and we're hopeful that it doesn't get to that point, but we should at least be aware that is on the table, a potential scenario to play out.
And so there's going to be speculation right now as to what's going to happen economically. You have bulls and say, well, it's not going to, things are going to work out. You have bears who are going to say it's going to be a really terrible scenario. And that's the reason why you're probably not going to see the VIX at 15 here anytime soon until we start to get the data that actually confirms it. Because, some people are still saying recession. Some people are saying, no recession. Just listen to financial news. You're going to get opinions that are completely divergent from one another.
That's true. Pretty consistently too, Brent. Looking at the Russell, I just want to put a couple of lines on here. I noticed we're back below the 50 days. So if you were defining a confirmation signal by 3 consecutive closes over the 50-day moving average, today could be a rejection day for the Russell. We are trading below the low of our high day in the push. So that is notable for us. Let's see how that looks at the close. That's a bit of a heads up on the Russell, a little bit, disconcerting. If we, however, looked at this on a weekly chart, Brent, I find this to be pretty notable. I'm going to pull back. This is a monthly, by the way. I'm going to hide my extended moving averages or my shorter terms and just leave the 100-week moving average on there, Brent. And, again, I'm doing this not to tell you that this is a great signal, but rather to remind us that sometimes when you're investing in the long haul, it can be just as simple as finding a long-term trend line and saying, oh, we're down X percentage from that peak. This is a point where I'm much more comfortable devoting dollars. This is really a casual but yet comfortable for a long-term investor process that they'll incorporate to exposing new money to the marketplace, Brent. What do you think about this chart here, the long-term?
I think it's great. I think it's good perspective to use the longer-term charts and just see. And you can see, well, maybe we were, and admittedly what I'm about to say is total hindsight, but 6 months ago or something, maybe it's an indication of where we were in terms of were we overvalued? Was the market kind of frothy at that point? When you're that extended from the moving average, from the long-term moving average, maybe looking at that, it's not really that surprising that we've come down quite a bit just from a valuation standpoint.
Yeah, I think that's just a fair reminder. And you all know that I like to give you multiple time frames when we look at these things. And of course, this conversation that we title it Trader Talk in today's market. That's why we host it 4 days a week. But it can be really easy to miss the forest for the trees sometimes. And paring back on your time frame or increasing your time frame with a longer window and using monthly or weeklies can be fairly helpful. So just a reminder there. The other thing, obviously, we're going to hit real quick is the semis. There's off about 0.5% here. Very similar look in the form of the chart once more, back below the low of our high point to this point. So we got to be a little bit aware on the semis. This is kind of an intriguing spot yet again, isn't it, Brent? Notable that the small caps and the semis kind of acting similarly here relative to their own moving averages.
Yeah, that's an important key technical level here, and we're still a little way. Of the Mag 7 stocks, Nvidia is the only one that has not released yet, and so but they're still, I think, a couple weeks away, if I'm not mistaken, from earnings. So that certainly can affect that. But in terms of technical levels, yeah, I mean those are kind of those key inflection levels, and if we're gonna. Of course, we're always in danger of dropping down, but if we can hold this level, that would be again, like I was saying earlier, it's kind of another support level along the way to try and help boost the index.
Yeah, I agree with that. Obviously, this group has been instrumental in our 23 rally and our 24 rally. Combined up 50% there or so, and this group peaked in July of last year and had been in the midst of consolidating and pulling back. And to this point, we have not really kicked that downtrend just yet. And if I were to extend, this line, this rectangle I've got in here, you'll see it's an important level, Brent. I mean, we've been here before. So this is absolutely a crux location. We don't have to get cute. We don't have to know if it holds on at the first minute it does or the first hour it does, even the first day. But it can absolutely provide us with a little bit of insight. So plenty to watch here, that's for sure. Now, Brent, we saw some questions in the chat. One of them was in relation to Mr. Buffett, who of course we learned this week is moving on from his role, going into as board of director, it sounds like. And the question was really tied to his cash position. I think it's important to recognize he'd been building that cash position for a while. He was utilizing, Brent, the upward trajectory of the market for the last couple of years as a means of reducing position size in the marketplace. And I found that to be kind of notable. Brent, when you look and consider, and I'm just bringing up Berkshire as just so we can talk around Mr. Buffett briefly here, but when you consider the amount of money relative to the portfolio, the amount of money in cash at Berkshire, Does it seem like that's a short-term thing for him, or is this more of a boy, we would really love to see valuations come in at average or below average where they would feel more comfortable to be deploying such a large balance of cash?
I think, and of course, I'm not an expert at Warren Buffett. I'm certainly not
Sure.
in his mind, so I can only speculate. But I think it comes down to valuation. And of course, market valuations change over time. The market changes over time. If you look over time, not just in valuations, you turn like companies' dividend policies that they use. When companies decide to split their stock and stuff, it changes over time. And we're probably not going to see valuations, who knows, maybe things can change, I guess they can shift back, but the market may be permanently, in a sense, willing to take a higher valuation than it did, say, in the 70s or something like that. So
Sure.
I'm not saying when they have valuation concerns, they're necessarily waiting for back when it was, maybe the heyday of making money in terms of valuation, in terms of that regard. But I think they do have valuation concerns with the market. They're not just valuation that are easily resolved here. I think that's the reason why they have such a large cash position. They're trying to find something that they feel is not overly valued. And frankly, it's been pretty tough. Now, it's probably a lot easier right now than it was 3 months ago, but I think it's tough, and I think that's why they have such a large cash position.
I think that makes a lot of sense. And obviously, when somebody who's been doing it as long as Mr. Buffett had, it wasn't exactly an impetuous decision or a short-term decision. It's much more likely a longer-term viewpoint that led to that, I think. And it'll be interesting to see if you're looking for some kind of comfort assigned with the market. Some investors in the long haul, believing in Mr. Buffett and his process for so long, some investors are going to look to kind of follow or track what Berkshire is doing when they start to deploy that money. Now, I'll remind you, he is not infallible. We have witnessed a number of instances where his investments haven't worked out. The big one that comes to mind for me is the IBM investment that they made earlier in the mid 2000s here, like 2010, if I'm not mistaken, somewhere in that ballpark. And it just didn't work out for the firm. It ended up with losses, unfortunately. But that's going to happen. Investors recognize that. They're not perfect up 100% of the time, even Mr. Buffett. So just some good reminders there, we hope. Brent, a little bit more in the way of economic viewpoint here. I thought we could hit on oil and see how things are looking here. Oil has been in retreat mode. And boy, it continues its downtrend. Look at the assault of the 20-day moving average to the downside. We continue to kind of rally into it and bang our heads on it. Brent, is this exclusive? I mean, as much as anything, because we hear that there is increase to production a little bit, but at the same time, really, this is a story about consumption, isn't it?
Yes, I think so. Oil, there's a demand side and a supply side. The Saudis have been willing to, because they seem to be the driver, it seems, in terms of OPEC decisions, but they've been willing to push for more supply, even in the midst of lower oil prices. Part of that may just be, they're sick of dealing with cheaters, so to speak, in terms of production there, in terms of OPEC. But they've been willing to put the gas on in terms of the supply side of things. Remember, Saudi Arabia, and I don't want to get too much on a tangent here, but they can be profitable at a pretty low price for oil, per barrel of oil, more so than a lot of other countries out there. But oil is low, and I would agree with you, it's mostly a perceived demand side. And if we get out of the discussion of, recession, economic uncertainty, then I think what we're likely to see is we're going to see a nice reversal in terms of oil prices. Right now, it's kind of nice that oil is lower because that can certainly help input costs with inflation. And That is a concern. The concern of inflation is not done with at this point. But yes, I would agree with you. It is mostly on the demand side.
All right. So if in watching oil move lower, if we're looking for maybe an inverted chart, Brent, it wouldn't be hard to find one. How about gold?
Yeah.
Gold continues its move higher. We have brief, and I do mean brief pullback. It found the 20-day moving average, and my goodness, it started to pop. Now we have come back to highs. This looks a little divergent in terms of the level to which we've rallied. When I look at the RSI, not having made it to overbought conditions, at least not initially, have to wonder if there's a potential for a breakout here, Brent, because it does kind of look, a little bit bull flaggish there. And of course, if the concern as it relates to the health of the economy continues, there's going to continue perhaps to be a little bit of flight to gold, flight to safety.
Yeah, I mean, with that flag part that you kind of highlighted, that coincided when we hit the market low, basically, and bounced up, and we had that nice little rally there. And when I say market low, I mean equity market low. And so it's not surprising when people are like, oh, it's less of a concern, so less need for flight to safety. Well, what would it take, 2 days for us to to recapture the new highs here on this almost? So that was short-lived. It's hard to argue with the trend. I mean, it may seem like, gold is overbought. And, in my mind, that seems kind of almost the case a little bit. But who am I to argue with the chart? The market is the one that dictates it. And right now, from a technical standpoint, that's a bull flag uptrend.
Yeah, it is. And it doesn't mean that you need to be invested in it by any means, everybody. If you're thinking about it from a long-term viewpoint, commonly precious metals are making up a very small component of a diversified and allocated portfolio. So by no means is that a recommendation or encouragement. Just wanted to bring it up because the level to which we have pushed again, 3,400, it was 3,000 was a big level. We moved through that, went up another 10 to 12%. There's been some talk that perhaps silver will play a little bit of catch up in that way. Because it hasn't made the move to the upside that we've seen from gold, but a little bit rangy in here before, the manner in which it's moved, certainly lagging gold. That much is absolutely true. And I think it's just, to answer Grumpy Gene's question about why doesn't silver follow gold, it's the tie to I think it's the old school viewpoint of what gold represents for us, Brent. I mean, we're not a gold secured dollar anymore, right? But nonetheless, there's a lot of history there, isn't it?
It's commonly perceived to be more of an investment, I guess, than silver, which obviously has more industrial uses as well. And so it just comes to people's minds first and foremost when it comes to alternative investments.
I think so. I had a question there, Brent. We were talking a little bit about shipping and things to pay attention to, and I wanted to bring one up here. So I'm going to do something that's going to I'm going to bring a quote to you, but I'm also going to show you how to look some of this stuff up because these Dow Jones symbols are not easy to remember, everybody. Yeah. But this is the Dow Jones U.S. Marine Transport. This is the total stock market of the U.S. Marine Transportation. Now, I'm going to just call out, this, of course, is not a tradable entity by itself, but I will call out the fact that we've got a pretty healthy downtrend in here, sir. A couple of levels we have rallied into and managed to be rejected at. It's been once. How about a second? And maybe even a third right as we speak here, getting rejected. Now, we are back to the 20. So some traders will tell you, okay, low is in, but I think there's a little bit more to be paying attention to here, Brent. And again, this is perhaps one of those scenarios where traders are paying attention to the chart in advance of the actual news here. Things got decidedly more negative, as you can see, as of April 1.
The markets, whether it's marine transport or any other market, tries to anticipate it's forward looking. And So I think that's what we've seen. And so as you've seen the kind of ups and downs in market sentiment, forward-looking market sentiment, so we've seen the ups and downs here. And that means that the worst day, you may see a turnaround in an index before the worst data comes out. And I'm not saying I don't know what the data is going to be, but at this point, in terms of general trend, I think the general trend that you drew on the graph, that white line, is the prevailing trend right now. So that's the one that's the biggest thing that we need to overcome if we're going to see a technical turnaround. It's nice to have the higher lows in there, but that general trend needs to be broken before I think many traders would become that very bullish on marine transport.
I think I agree with you. If I was, and again, I want to provide a little bit of education here, everybody, because there are many of these Dow Jones indices that you can use from a very broad viewpoint. Now, they can be very helpful in determining broad groupings and their trends. So I just wanted to highlight quickly an easy way to utilize these would be to use the drop-down menu here. So drop down, select lookup, and then just start with DWC, $DWC, and look what you get access to here, everybody. I've got 100 as the maximum, of course, but you've got everything you can imagine here from the Dow Jones side of things in terms of monitoring individualized groups, industries, sub-industries, etc. This can be very, very helpful for you. So you'll have to go to the third-party Dow Jones in order to dig in to locate individual companies within these groups, I believe. Unless Brent has another idea, I don't think that's going to be imminently available within thinkorswim and these categories. But if you were utilizing a proxy investment, Brent, an ETF, obviously that's going to have some information we'll have available internally. But I think you'd have to go to Dow Jones to find that stuff directly.
Yeah,
Is that your understanding
I think that's the answer to Brown Buffalo's question there too.
So.
But hey, here's another thing on this. Instead of having to do this each time, then what you do is you take the symbol, create a watch list and go, well, this is important to me.
Perfect.
And this one's important to me. And then add those symbols to a watch list, and then they're right there for you in the future. And you have your own market watch list of some sort.
Yeah. Great call. Great call. As you can see here, everybody, lots to consider in the way of these individual groups that can tell you a little bit. Travel and leisure is a very interesting one to consider when we talk about, are we Americans out and about? Are we doing what we want to be doing, or are we not? Are we pulling back on travel? Are we not? And this is a pretty interesting level to which the market has rallied back in this space, Brent. I've got my crosshairs basically at resistance, I think.
Yeah.
Let me put a line on that. That kind of stands out to me a little bit. Wow.
Yeah, and it's been a nice little recovery there, and so we'll see. But that does seem like a pretty key level.
It sure does. I just couldn't help myself. It popped out the screen at me, and we've been hearing that some of that stuff is healthier than we expected. So kind of seeing that in the form of a chart is kind of nice. All right, we also got a few stocks in the news, Brent. Thought we could look at a couple of charts. One of them is in that semiconductor space. AMD got upgraded at Bank of America to buy from neutral. New price target is 120, up from 105. Boy, that 120 calls out on the chart, doesn't it, Brent?
Yeah, it sure does. And so we'll see. Again, this is kind of one of those things like we were looking at before, where is the general trend, have we seen a change in the general trend? Because it's been down. I mean, AMD has been kind of, I guess, a disappointment, if I can say that, in terms of it seemed like after NVIDIA, because everything seems to be second place to NVIDIA right now, or has been over the past couple of years, I should say, past maybe 2-3 years. But it seemed like AMD was like in a good position compared. Well, they've just gotten crushed. And that general trend, though, we haven't reversed that. And you're right, the 120 level it's still a ways away to get there. I mean, that'd be a 20% gain to get up there.
It would. And yeah, it'd be consistent with the downtrend line. There'd be some steps needed to be accomplished if it got there. A little bit interesting that yesterday or today we've tried to break that out and rallied into these levels in here and pulled back. So, there's not exactly a whole lot of enthusiasm. I mean, certainly enthusiasm off the Bank of America upgrade and post earnings here. But, what you're looking for, nonetheless, is still technical analysis 101 stuff, right, Brent? We need to see a higher high to validate a change in the shift in the trend. Right now, the trend remains bearish in nature. We've had 2-3 days above the 50-day even and have not been able to maintain. So we're at a crux location perhaps on AMD as we speak, given that. Now, the other one that we had an upgrade on, another one we had an upgrade on, rather, not the other one, but one of them is Honeywell. Honeywell got updated, or rather upgraded, excuse me. Honeywell got upgraded to buy from neutral. They are also at Bank of America, excuse me. Price target here, 250 up from 210 after the company reported a solid beat and raise in their Q1 report. So, the market seems to have liked it, and yet, boy, an important level once more, man. I tell you, we're finding resistance everywhere we look.
That is a key level, I would think, there from a technical standpoint, and up a couple percent today, but the next couple percent may be a more challenging because that is the resistance level that we have on that. But at least on this one, it seems like if you were to draw a trend line from over the highs over the past 6 months or so, we may have broken above that at this point. So this seems like kind of right there. So this seems like a more of a significant turnaround than like AMD, which we were looking at, or some of the others where we were looking at, where we said, well, really the trend just hasn't, the longer term trend has just not changed yet. On this one, I think we're seeing some meaningful changes here in that.
Yeah, we certainly could be. That quick action from yesterday where we got right back above the 200-day today is telling us that there's a lot of push and pull at this level, I would say.
Yes,
So
and if you were to look at like a volume profile on this for say 6 months or something like that.
Let's see. There's volume profile. Let's apply that, and then let's I've got it as a 1 year. Let's make it 6 months just real quick. And then that profile will come a little bit tighter. So, boy, we are right at the volume point of control, aren't we?
Yeah, we're right there. And you can kind of see it. You could draw a channel. I mean, we have kind of the upper end of the channel there. You could draw a lower end, some support down there, which is kind of in the lower section of that. And it's a nice, there's your area that it's going to, and if it breaks below that, it's going to tend to want to kind of go back up to it, or above it, it's going to tend to want to come back down. That's an area where we've seen a lot of trading. A lot of people are more comfortable with it in that zone, that area. And so, that's just a technical analysis tool a lot of you maybe aren't familiar with, or this is just showing where the price levels that more people have traded at. Higher volumes have occurred at those price levels. And so the areas where it peaks out there are going to be the areas where it tends to, it can obviously break out, but it tends to want to stay in that area.
I like that, you use the same terminology I do. Tends to do this. It might be apt to do this. It's all about, as we often say here in this class, probabilities, everybody. We just get a little lean one way or the other. The comfort with those probabilities is at the trader's discretion, of course. So that means it's up to us to individually decide, all right, that lean I have leads me to put on a full position rather than a partial position, etc. All of which can be very, very helpful in managing our positions, managing our portfolio, and of course, mitigating our individual risks. So let's see, there was a question in here. I think it's Brown Buffalo. I think you're asking about the volume profile, if I'm not mistaken. So let me just highlight that one more time. What we did here, we just searched all of our studies, everybody. I click that beaker or flask at the top. We go into the all studies. In this case, there's a lot of volume studies. As you can see, if I start with VOLU, that's not going to work so great. So come in here and start with profile, PROF. And then you're going to find it real easily. Volume profile right here. and then you can double click and get it added. And then I'll just remind you, if you've got multiple studies in here, everybody, this eyeball can basically just be a hide and show function for you. You can load all these studies, you can keep them in there. Think of this as your golf bag, and then you turn the eyeball on when you're ready to use that club, basically, right? Like I often say, you're not going to use the driver in the sandbox, hopefully, and you're not going to be putting from the tee box either. So use a proper study for your scenarios as always. Brent, really nice, good discussion with you this morning. Anything else you'd like to leave our viewers with as we wrap it up?
I wish everybody a good Fed day. So we'll see. We may see a little more volatility after 2 o'clock Eastern time today. 2:30 is when Powell is probably approximately 2:30 is when Powell will speak Eastern time. So, but other than that, have a great day, everybody.
Yeah, that's right. We got more to come for you here on the channel, everyone. Keep it tuned right here to the Schwab YouTube coaching channel, and follow Barb, Brent, and me on X if you'd like to engage with us outside of the classes here. We are happy to hear from you. Have your follow there. So want to wish you all a fantastic Wednesday. We look forward to seeing you all again real soon.